What is up, YouTube, and welcome back to yet another Fridge Financials video. In today's video, we are breaking down quite a few positions that we have opened up. At the time of recording this video, the market just closed about a half hour ago on Thursday. Crazy day in the market. It seemed like markets were pumping early morning in this case because of the euphoria of NVIDIA earnings. We had the courts from the trade organization, from the World Trade Organization, was denying the reciprocal tariffs, and people were happy and excited about it. Then Trump was like, I'm appealing this. And then the market just kind of boomed all over the place. I don't know. Very weird, interesting day in the market here, but we definitely took advantage of some trades. We got 4 positions here, and we're looking at over $21,000 of cash collateral being used here, almost $22,000. So if that seems like something you're excited about learning, feel free to like the video, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. We'll make this video hopefully cover all the important data points we're looking at here, and we'll kind of show you the trades as we went into each one. So 4 major stocks that we're looking at. The first one that you will see that was brand new that I opened up was ANET. Now, ANET is Arista Networks here, and what you will see here, I do the options profit calculator to make sure it's even worth my time, right? So my ANET position I got in at this case is right now it's sold off quite a bit. If you take a look, it went down, it was down about 7% on the day. So I was like, you know what? Let me sell in an option here. So I sold it down at the 130. Let me get rid of that. So I sold the 130. I made $130 in premium. We're going to be looking at collecting here, looking at the $82 strike price put for ANET. Now, again, as you will see, it opened up literally a half hour ago. A 26 delta is a really good one. Looking at about 26% of the time, it will be exercised, and I will have to pay for these shares, which is pretty good. And what you will notice here is that, the return for the 2 weeks that I had this position for is not huge, but I look at the annualized return. So I'm using this calculator here. 80% probability right now, it's according to this calculator, which is not always accurate. 80% probability in this case, and we're also looking at almost a 37% return annually as a result of this trade here. And again, as long as it doesn't come down another 6-7%, by the end of next, 2 weeks out, good. We get $130. We move on. We do it again, and we keep these positions going. So ANET is the first one that you're seeing right here. Again, I like the company. I'll show you what I'm looking for in this case here afterwards. We're kind of just going through each one. Bath & Body Works, I opened the position before earnings. I closed it before earnings. It comes down 6% today. I open up another one afterwards, $43, strike price of $27 in this case. Take a look at Bath & Body Works here. Again, same thing, June 27th. $44 out of this contract here, 1.66% return, almost a 29% return annually, which is more than double the average S&P, and also looking again at 80% probability of profit. And what we're looking at here is it just has to not come down another 6%. Earnings came in and they were worried about tariffs and stuff like that. I'm going to look into their earnings a little bit more here, but why not? Comes down a little bit, we get a little bit of that reaction to it. We still have a little bit of time. I like this company. My fiance goes there all the time, and we shop from there, and we make a lot of purchases from it over the time. They have candles, lotions, you name it. It's there. It's filled all the time. I love Bath & Body Works. I'm in. $27, not too bad. And I'm already up $1. Woo, we're already made $1. Fantastic. Second trade, Bath & Body Works. Third trade, Supermicro Computer. I've been trading this one multiple times. Why? Because their implied volatility is always relatively high. Now, with a delta of only 10, that means this is a very good probability of profit between now and the next 2 weeks. You can take a look at SMCI, $34 put option for $34 here. A 1% return, 23% annualized return, which is more than double the average of the S&P. And it's a 91.5% probability of profit. Don't come down 17%, and we're good. And if it does come down 17%, I'm getting it at a bargain, which I am not going to complain about. Love it. SMCI. Last one that you will see, we'll talk about these a little bit more. Last one that you will see is Uber. Uber's down about 4.5%, almost 5% on the day here. I like Uber. People are using Uber. I work at a high school. Students are Ubering all over the place. Uber into the mall, Uber into their friends' houses, Uber into sports games, you name it. They're going there. They're using them all the time. So sold this option here for $60 in premium, already now up $2. Absolutely great. Delta 0.14, can't complain about it. And Uber is a little bit more of the quote unquote conservative one. Only a 0.79% return, almost a 90% probability of profit, still an 18% annualized return, which I will not complain about. Still more than the average S&P 500 return. So if you add up all of these options here, so you got 8,200 in collateral for ANET, 2,700 for Bath and Body, 3,400 for SMCI Supermicro Computer, and 7,700 for Uber. You are looking at a total of 21,900. I put this at 2,750 on my spreadsheet. I don't know why. It's 27 actually, so I can actually take that away a little bit. So 21,900, almost $22,000. Premium collected, we're looking at $268 out of that. Gives us about a 1.22% return in 2 weeks. Fridge, that's nothing. S&P can go up that much in a day. Yeah, I'm aware. But if we consistently make profit and we grow the portfolio back up, that becomes an annualized return of about 28%, which is almost triple the average S&P return. I'm not going to argue those numbers there, right? Can't argue those numbers. Now, let's break down the ideas here, right? So what you will see, and I know people have seen this before, Rich, what is this spreadsheet? Oh, good Lord. So I don't want to go crazy into it. There's a whole video about it. You can find it on my YouTube channel as per usual. But the spreadsheet here basically tells you the stock, the current price, what it traded at for the day here, the intrinsic value, 1 year, 3 year, 5 year, discounted cash flow for the bear case, for the base case, and for the bull case. And I've always taken in a margin of safety into both of these. So if you go all the way down to the bottom here, we'll take a look and see. This one has a 20% safety. This one has a 10% safety for the cash flow, discounted cash flow value at what it's valued at right now. And what this whole spreadsheet does is it counts how many boxes hit those green boxes I'm looking for. And if it hits 4 or more, we're looking at opening potential positions for it. If it doesn't, then we wait and see. And what you'll notice here is I look at the current price and I have the cash secured put strike price. All right. And how you find this value here is I basically take the 1 year price and take away 10%. Because if this goes down to say this goes down to 109 in this case here, that means that I'm looking at a potential 10% return per year. Now, why 10%? 10% annualized return per year for me is the S&P 500 long term. So why would I want to open a position where the potential upside is down 12%, where I can just put the money into the S&P 500 and make 10% on average per year instead of buying a company like Chewy, for example? But let's say Chewy comes down to, say, $35. Okay, if it comes in at $35, as you'll see right here, okay, now there's a potential room to go from 35 to 39, which is about an 11% return, which is about the S&P 500, if not a little bit more. And then the 3-year annualized return, 23%. Annualized return for the 5-year, 31%. So that's kind of what the logic is, the spreadsheet. There's a lot of math going into it. When I start doing live streams in the summertime, I'll break it down more for you. But the 4 stocks to take a look at here, and remember the strike prices, right? First one, SMCI. My cash secured put minimum $34. What is it at? $34. You plug in $34 into here instead. If it comes down to $34, again, it's a little bit under, but take away the premium that we paid, which was, $35. So it'd actually be $33. It'd actually be $33.65 with premiums. $33.65 puts me over 10% return for the year. And then 36% for the 3-year, 59% for the 5-year. Amazing stuff. Let me fix that one now. So first one, again, strike price I set at $34. I'm going to go on down to, there's plenty I can look through here. Bath and Body Works. Oh, look. Minimum strike price, $27. What do I have it at? $27. $27 minus the premium per share. 13% return for the 1 year, 14 for the 3-year, 15 for the 5-year. And again, annualized means that's the return per year for the 3-year upside and the 15% return per year for the 5-year, right? It's not 15% over 5 years. It's 50% per year for the 5 years. I divided it by 5. You can see it up here. So that's how that number comes into play. So that's bought the body. Beautiful. Third stock that we had was ANET. ANET was 83 minimum. I got it I'm doing it at 82. Boom, 11, 20, 26. And that's without the premium of $1.30, which actually makes this $80.70, which actually puts the returns even potentially higher for the 1 year, 3 year, 5 year. And last but not least, coming on down to Uber. I know Uber's down here. Uber, $77. What would I do Uber at? $77. So we got $77. Puts me at 10% minus the premium. So it'll be 76. 40, take away the 60 cents per share, 11% upside, 26, 37%. Can't complain about any of these numbers right here. I love Uber. I love these companies I'm looking at investing here, and I can't complain about any of them whatsoever. And again, what you will notice, down 4%, sold an option. I was going to do ARM, and I was like, I'm not feeling ARM right now. Arista, down 7%, sold an option. Bath & Body, down 6%, sold an option. Supermicro, only down about 2%, still sold an option. I sell cash secure puts on red days. You sell cover calls on the green days, right? And that's the idea behind it, because you get to maximize and juice up that premium. So this spreadsheet, people are asking, Fridge, do you have a link to the spreadsheet? Can I have access to the spreadsheet here? And I think what I want to do is I want to keep kind of playing around with it a little bit more. What I want to do though at one point, and hopefully when we hit 1,000 subscribers here, which right now we're getting pretty close, right? 813 at the time of recording this. If we hit 1,000 subscribers, I'll make this spreadsheet available for every single person who watches these videos, who wants to use it to help benefit you. And again, these two models so far have worked out very nicely. I did it for Alibaba, didn't get a sign. I did it for Enphase, Celsius. I did it for CVS. I did it for Supermicro. I did it for Block. I did it for Dutch Bros right now I'm in. I have Kava I'm doing it for. Salesforce I did it for. Like I've done it for so many of these using this spreadsheet, and it's worked out pretty nicely for me so far. As you'll see, the month return, we're looking at a pretty decent up, almost 5% on the month, which is absolutely awesome. 3 months, we're still negative, but what I like to see, and what I really like to see, is look at this nice little recovery we're doing here. At one point, we were down 15%. Now we're down about 9%. So we're starting to recover those gains, build the confidence, and I'm starting to feel really, really good. And I'm loving that this spreadsheet does a lot of stuff for me here. The only thing that sucks is that in a year, I'm going to have to go back through and update 1 year, 3 year, 5 year again. But that's for Fridge Financials in December when we're on Christmas break. So anyways, thank you guys so much for watching today's video. If you made this far in the video, feel free as always to like the video, subscribe to the channel, turn on the bell notifications, share this video with your friends, with your family, with your neighbors, you name it. Share this video as always. I hope you guys making money in the market in some way, shape, or form. Again, 1,000 subscribers, we'll hit this spreadsheet out to the public and people can use it and hopefully make some money, just like I'm hopefully going to keep doing in the long term. As always, thank you so much for watching. I hope you guys make money in the market, and I will see you in the next video.